Today, my guest is Jimmy Moncrief. He's with Real Estate Finance HQ, and I found him. I was rooting around for some good information on real estate financing and came across his site and reached out to him and invited him to be a guest today, and I'm excited to have him. Jimmy, welcome to CREPN Radio.
Hey, thanks for having me. Glad to be here.
Well, we're glad to have you. And if you don't mind, before we get started, if you could give a little bit about your background and how you got going in real estate and the like, that'd be great.
Yeah, great. So I actually started out in the stock market. I was an analyst at a hedge fund. I won a stock market competition when I was 12, and then I moved, graduated from college, got a job at a hedge fund, worked my way up, became a partner. And then, in between a house move, instead of selling my house, I got into rental property. And, we just started noticing, like, man, I'm good at stocks, I really am. But with rental property, I just noticed with comparing it to the stock market, like, it just kind of, it's less volatile, I guess I could say. It's just a couple of years later, you realize your mortgage is paid down, you've made cash flow, and I just started comparing the numbers, and it just seemed like for me, real estate was just better. And then also, what appealed to me was the leverage, how you could grow, using bank financing and stuff instead of you working hard for your money, then you taking that hard-earned after-tax dollars and investing it into the stock market with all the volatility. So for me, real estate was just personally investing in it was better. So then a little long answer for your story how I got into this. So when I got started really serious into buying multifamily properties, I was like this high-paying W-2 hedge fund guy. And then I had a business partner. He was this insurance. He worked at an insurance company. He was an executive. And he was, we were just basic W-2 employees. But he didn't, I was calling banks and we couldn't get a loan. And we didn't even need to get a loan. We could have bought this property in cash. And we're like 800 credit scores. Like, what are you talking about? So I call another bank. Got turned down. Call another, same thing. So it was just bizarre. So, so then fast forward, I worked at a different hedge fund. And then I got into working in a bank. And then and then I got to know kind of how banks operate and negotiating strategies of these developers use and stuff. And I don't know, it was just kind of very fascinating to me about how I got turned down for a loan. I didn't need a loan, and that's why I'm so passionate about financing real estate is the just the power of it, and just how I got turned down and how God works. Now I'm financing real estate myself, and it's just interesting. So that's why I started my website and to teach others, how to finance real estate. That's just very passionate about it.
Well, I love that, somebody that's, a pro at the stock market recognizes the power of real estate. I think, and just at all how you pointed out there, it's kind of when the light really shined for me was, I'm giving my money for the 401k or investing in my money into the stock market, hoping it grows as opposed to, like you said, the leverage and the power with it that you have with real estate. So that's awesome. I'm excited to talk about, real estate financing and deal analysis. Our goal here is always to learn and share and help our listeners focus their real estate investment strategy in order to grow. So I'm wondering what the basics of financing, and I want to remind everybody as they're watching this to be sure to check out your website. Again, we'll give all the links in the bottom of the show notes and stuff, but Real Estate Finance HQ, When I found it, it was just it's full of information and tools and great reads and stuff. And so if we can, and again, even going back to your story there, when you were talking about getting turned down at the bank, were you trying to buy like a larger multifamily, or were you trying to buy like smaller properties?
It was, I mean, it was a troplex, so it's just
Three
small
unit.
and yeah, and it was in a great area, and the cash flow was just insane. I mean, it was just I bought a 3 bedroom for like $85,000, 3 unit for $85,000, and it produces like 27,000 in rent. I mean, yeah, I mean the cash flow is nuts,
Wow.
and in here like I'm not. I don't want to quit my job, and do this
Right.
full time. I'm just like, yeah, we had the cash to buy. I mean, we just like it was just nuts. But yeah,
Well, it sounds like you ran into exactly, again, another of the ahas I've run into is just that distinction when you're talking a residential 1 through 4 unit as opposed to a commercial property 5 and plus, and just how the banks, the rules, and how they look at you, the individual, like saying, hey, Darren, well, I don't know about you. You're kind of, you've got a lot of loans out there, and you've got a lot of obligations. And when you're in that 1 through 4 unit, as opposed to when you get to the commercial side, 5 plus, they start looking at the cash flow of the property. And so it sounds like you got hit with that as well. I'm glad to hear I'm not always alone on those kind of lessons I learned there. So that's great. So if we can, like, would it be fair to kind of just distinguish between the difference between the residential and the commercial finance? As far as, is that a good place
yeah,
to start?
absolutely, it's a great place. So that's like one of the first things I talk about when people call me. It's just like you have to decide what's important to you from a in terms of do you want a 30-year fixed rate, and then I mean, and that's awesome, but then that goes on it's in your personal name, so your personal credit report, it's a personal mortgage, another residential mortgage. Or do you want to buy in an LLC or S corp or something, and have it structured commercially so you can grow a company, and but it be on a 20-year amortization and only fixed for the first 3 or 5 years, and then it can balloon or renew or mature, whatever the structure might be. So yeah, I mean that's like the very first thing people need to decide what they value.
Got it. And when you do that, do you find that the analysis is substantially different when comparing a smaller property to a larger property? Do you still kind of go through the same nuts and bolts of?
Right. Well, for me, it's not. It's great question. Maybe the wrong approach, because it's not like smaller property necessarily. It's the structure in which you buy it, because the you can get a commercial loan for just a single family house, and it's a lot. That side is just a lot easier. If you want a conforming 30-year mortgage, I mean, it's just going to be it is what it is. It's just a ton of paperwork, and it's just a ton of.
Right. No, I'm always amused too by the all of the electronic signatures and all that stuff now, where they send you like this PDF that if you print it out, it'd be like hundreds of pages, and they want you to just like click the X box and
Yeah.
yes, I agree to everything you're saying, and that's somehow providing more protection for the borrower, that you've now got this in hundreds of pages of documents that nobody read, kind
Yeah.
of thing. But yeah. So all right. So you look at it as just start out and say, are you wanting to do a shorter term or longer term? Are you looking? Would you say that a relationship with the lender is a part of that when you're deciding that?
Yeah, and I would have so that was mom. Whenever you lose a deal or something falls apart, I kind of you kind of analyze, okay, what went wrong, whatever. So when I was getting turned down, right? Well, that was just it. Like I was just cold calling banks, just like, and they didn't, I don't have a relationship with them. They don't know. I was talking to the wrong person anyway, but that doesn't matter. Like I was absolutely. It's just like they didn't develop a relationship, and they definitely didn't develop and I didn't develop multiple relationships, and so yeah, absolutely. That's just and that is probably the biggest thing I see holding young real estate investors back is, we live in this internet generation, and everybody's uh, this millennials, they just want to push a button online and get a loan, and I mean, so do I. I want to push a button on a website and get $500,000 wired into my, you know what I mean? Like,
Right.
but it's just it doesn't work that way right now. It just doesn't. Not that I've seen anyway. Every successful real estate investor I know has developed multiple relationships and just really fostered those and done a good job of just fostering multiple, financing relationships.
So would you say that's kind of the first step you'd recommend any investor, if they're a prospective investor or somebody that's really looking to leverage and grow, is to nail down their relationship? Is that kind of the focal point
Absolutely.
of?
That's like my biggest thing I teach and I tell people is, you're the customer. You go like you go interview bankers and lenders and people you want to do business with, and the key is to do that now. So most people, they spend all their 99% of their time hunting deals and and finding deals. And I get it, it's fun, it's like it, it's why even talk to a lender if you don't have a deal? But when you interview lenders, it's like you're seeing if you yin and yang, if this was a good relationship. It's just like any kind of relationship. Is this going to be a good relationship or a bad relationship? And let's figure that out now before I have a deal. And all deals seem to have like some emergency. I need to close in 2 weeks. So now you get to, if you don't do it that way and you just you find a deal, and then okay, I need to close this in 2 weeks. I was like, well, I don't even know you. I don't even
Right.
know. You don't even have deposit. I don't. So yeah, the time to start fostering those relationships is before you get a deal. To
Right.
talk about what they like, what they don't like. You know what I mean? Because you could have any bank. I mean, it doesn't matter because I've worked at big banks, small banks. I mean, any bank, any size, every lender has kind of their stuff that they like to do, their niche. And it's like one guy, well, he likes to do construction loans. The other guy likes to do loans to trucking companies. I mean, another guy likes to do solar. I mean, everybody kind of has their loans they like to do, and you'll pick up on that when you're interviewing banks and bankers and going through that process. Yeah.
No, I think even from personal experience, I can't stop nodding my head in agreement. I'm like yes, yes, yes. That's exactly what you're saying there. There was a deal. The most recent one we bought was a little 12-unit property, and in kind of researching it, we realized that it had been under contract, but it failed for the financing, right? And so before we submitted our offer, I made sure we had a letter from our banker saying yes, we were approved. Meaning that it wasn't like this. It was going to go.
Yeah.
We weren't going to go through that hoop again, kind of thing. And I think it. Obviously we got the deal, but I think it gave the seller some reassurance that okay, we're past that hurdle that screwed us up last time. So I think that's a really valid point there. Well, if we can, I'm just kind of curious. If you were to give listeners some advice when they're going to speak with a banker, is there anything that they should take with them or be prepared to be able to present, or some, numbers or ideas or thoughts, or is it more of kind of like just a kind of get to know someone first?
Sure. The most important thing is just getting face to face with somebody. But and I definitely wouldn't stress if you I'm a big fan. I'm old school. I always have paper around, notepads and stuff. But I would bring, so everybody's not looking at a screen. Like I would bring a listing of just a hypothetical investment, or something, and off LoopNet or the MLS or something that you would that you're looking at, and then like say it's like this 12 unit and you buy it for 1.2, let's just say $1 million, it's like, okay, then the banker can work through his own math, show you his math, like, okay, here's how I'm going to underwrite this deal, right? And here's how much cash I need you to bring if this happens, and here's how much cash I need you to bring if we go this route, and here's your rate if we go this way and this way, and here's how I'm going to stress test this. And a good banker is going to walk you through those numbers and show you like what they're seeing, and that's ultimately going to protect you and your company, and then that's so you have a good stakeholder with that. I know you do a good job on that on the insurance side as well, and I encourage people to do that on the insurance side as well.
No, I agree wholeheartedly. You talked about the stress test, and I think the other thing that was kind of eye opening to me was the cover ratios and just all of those numbers that the bank's really looking at. They they love the fact that you think it's cute and it's got maybe there's some room for growth, but if they're going to loan X number of dollars and they're going to give you terms that are going to cost this much on a monthly basis, and you go through all your NOI, they're going to test it. And I think, like you said, they're a partner essentially at that point, because they want to make sure you're not going to fail. They're not looking to come in and become a landlord. So that's awesome. That's good stuff. I'm just trying to think here. We talked about the relationship, the importance of relationship. Get to know a banker. Is there any kind of a timeline you would recommend somebody kind of invest in, trying to establish that relationship so they're ready? I mean, kind of like, again, instead of putting the cart before the horse where they walk in with a deal, I need to close this in 2 weeks. And
Definitely. I mean, I do it like now, as soon as
right.
they stop listening to this podcast, and just a couple months before they have a deal. I mean, several, because you want to be like, again, fostering a relationship, and just, I mean, a good banker will have ideas that you might not think about, and because real estate, as you know, changes, and I mean, commercial, you have a strip center, and then all of a sudden it's a single tenant, or you have a rental property just with a long-term lease, and then all of a sudden it's an Airbnb property. Just, things change. So
Got it. Well, I know you're kind of tight on time and stuff, and I want to be respectful of that. Before we wrap this thing up, is there one thing that you would recommend to our listeners to do in order to have success? And we'll just say, in this case, establishing the relationship with the bank. Is there one thing?
To start now, that's my biggest thing. Action is always going to beat everything, and so take action, and if you meet with hopefully your listeners, or they're listening to this great podcast and they're educating themselves, and they're meeting with other skilled real estate investors, and what you'll find, or what I've found anyway, with every talented, very successful real estate investor, is they have had multiple funding sources and multiple so to really educate yourself on that, and so that's it. But start now and start interviewing stakeholders. Yeah.
I like it. Before we wrap this up, what's the best way for our listeners to reach out and learn more about you and get in touch?
Yeah, you just go on my site, realestatefinanchq.com, and hopefully it's just jam-packed with information. When I started this site a couple years ago, I really want to educate people on the process of how banks look at like real estate and stuff, to educate people. And then a lot of people just really struggled with the cash, to come down. So I kind of also talked about like creative things I've done to make extra money, to have the cash, to invest in real estate. So it's more of a personal finance blog, I feel like at this point, but it's very educational. A lot of just a lot of valuable information. It's all free and stuff, so I don't sell like a $50,000 consulting class on there or anything. But it's all free, and just I'm on LinkedIn if you want to personally connect there. So that's it.
That's awesome. Well, Jimmy, I want to say thanks again for taking the time to talk. I look forward to doing it again soon.
All right, thank you so much.
All right. And for our listeners, if you like the show, share it with someone you know. It's real easy to do. You can use the share button and share Jimmy's story and his information for Real Estate Finance HQ. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.